The United States and China have agreed to pause their trade war. Both nations are seeing eye to eye to lower the import taxes on goods that are being traded between Washington and Beijing. The U.S. Treasury Secretary Scott Bessent says that the trade talks between the two nations were conducted with a motive to avoid escalation, claiming that the United States does not want a generalized decoupling between the two largest economies in the world.
We do not want a generalized decoupling between the two largest economies in the world. What we want is the U.S. is going to decouple in strategic industries, which we saw during COVID.
Now, Washington and Beijing are cancelling some tariffs altogether and are suspending others for 90 days by the 14th of May. The additional U.S. tariffs on Chinese imports, that's the extra tariffs imposed in this recent standoff, will fall from 145% to 30%, while the recently hiked Chinese tariffs on some U.S. imports will fall from 125% to just 10%. Moreover, the U.S. measures still include an extra 20% component that is aimed at putting pressure on Beijing to do more to curb the illegal trade in fentanyl, a powerful opioid drug. Now, China has also halted other non-tariff countermeasures, which includes the export of critical minerals to the United States, which it put in place in response to the initial escalation. Now, the announcement of the agreement between the world's two powerhouse economies has been broadly welcomed worldwide, with hopes that the U.S.-China trade truce could finally put a stop to a full-scale tariff war. Most Asian stocks rose, tracking a rally in Wall Street following a rapid $6 trillion surge in the Standard & Poor's 500 from the brink of a bear market. Trading action on Monday suggested more upside. The gains in Asia were driven by Japanese stocks, with the topics rising for the 13th consecutive day. The United Kingdom and China deals led to investor optimism of a wider de-escalation in the ongoing US-led trade war on multiple fronts. Now, investors are also jumping back into the Asian stocks as they unwind the defensive measures that have been put in place at the height of April's tariff chaos.
I mean, at 30%, which is where they set, 20% being the tariff that President Trump imposed for what he sees as China's failure to do enough to rein in fentanyl precursor exports. 30% is still a high number. It's still an existential threat for a number of exporters. You saw a huge relief rally in financial markets yesterday, but for exporters who are having to do business planning, 30% is a number that they can't absorb. And so for shipments that are going out, they're going to have to figure out how to share the pain with the purchasers in the U.S. In order to make it work.